Hello, hello everyone. Welcome to this week's episode of Global News Review. My name is Ola, and today we'll be talking about very interesting things from AI to what's happening in Africa to the changes in Nigeria that are coming up and what you should be doing. That's the most important thing. Of course, you know that you should say hi once you're online and you're watching, so that we can connect. And if you have thoughts around anything that I'm saying, it's a live session, so feel free to drop a comment. I will see it and I would respond. Sorry for joining in a little bit late. We had some technical issues. For those that are regulars, I know this is coming a little late, but yes, we keep it moving. Life happens. So the first news out of the global space is that London Stock Exchange Group is granted data access to Claude AI, right? Now, why? What does that mean? That's the first question. What really does that mean? Um, we all know London Stock Exchange Group. Every day they are generating new data. What do I mean by new data? Trades are being done, earnings calls are happening, companies are posting their results, things like that are happening, and they have all that data. So ideally, or like for all exchanges, once you get on the platform, you can see all this data. There's some that you have to pay for access, right? But what's happening here? Claude AI is coming up with a partnership, or the London Stock Exchange is coming up with a partnership where they they connect directly with Claude AI. You can access their data like direct. Now, why is this important? The first thing you need to remember is that with all AI tools, ChatGPT, all of them, blah, 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 there's this challenge of when they give you data, when it gives you data, they're not human beings, right? When it gives you data, you have to actually go and cross check. Or when it says this happened in this year, if you are not sure that that thing happened, go and check on the regular internet, go and check from a credible source because it could be wrong. But what makes it interesting is that this is going to be a credible source. So there's no ambiguity. They're not going to check on the web. They're not picking the wrong information, blah, blah, blah. There's a direct plug in for financial data. So if you are an asset manager, if you are an investment banker, if you as an investor want to actually analyze some stocks, you can actually do that effectively on Claude AI. Now, what's the trip here? The trip here is that we really have this thing where most AIs are retail, but AI is as anthropic, right? They are positioning themselves for enterprise. They are not doing Google in any way. They're positioning themselves for enterprise, and what they are basically saying is that they want to be they want you to come on their platform and be able to trust their data. What does this mean from an investor perspective? From an investor perspective, the first thing you need to note is that all AI is not the same. Their positioning is not the same. So it's not because it's being called AI, then you just assume, oh, it will scale, it will work, blah, blah, blah. There must be a strategic positioning of that particular AI tool for it to make sense. Now, this agreement with London Stock Exchange is major, and it just has that positioning of fact to even highlight it very well. What did they even say they are? They are the name of the company is Anthropic PBC. It's that PBC. Let me even check what it means. It's for public good. Abi, no, let me check. There is actually a public benefit corporation. So they are from their registration that they are going to do stuff, create value, but for public good. So they are very particular about ethical AI, trusted data, things like that. So you can see that this is amazing. From the user perspective, it means that if you want to analyze UK data, companies are listed on the exchange. The best platform to use is Claude AI. Now you can see why you would subscribe, why you pay for the higher level, not just the free version. You can see their position, and it's quite interesting, and that is changing. Like right before our eyes, AI is disrupting AI. People are beginning to think and bring it to in a very realistic way. So well done to them, to the implementation. We look forward to the data. We look forward to also other exchanges. Like I can imagine if the New York Stock Exchange or the Nasdaq plugs into this. Glasgow's. That's on another level, right? So well done. Big ups to them at all. I will look forward to more innovation like this. I think that's the most important thing. Then the second news, we talked about Netflix 2 3 weeks ago. And I mean, if you are enjoying this particular session, I go back as a playlist on my channel where you can just watch that, because even though the news may have passed, may no longer be current, valuable, right? So the next news is about Netflix. Netflix, like 3 4 weeks ago, announced that they were adding gaming to their platform. Family members can sit and do games on Netflix, and the idea was that they want a platform so that they can now begin to do ads. Oh, I'm back. I dropped off for a bit. So the next news is that Netflix announces real-time voting for live content. It's still in line with that same strategy. What they're trying to do is to increase traffic on the platform, or increase not traffic now, increase staying time on the platform, right? So you are now going to be able to engage with live content. So if content is live, you can now vote. So almost like if you have a show that you like, or a real-time show or something like, and you can make a decision, like while the show is happening, you can be doing stuff. What are they trying to do? They're increasing engagement. They're increasing engagement. Now, what is this telling you? It's telling you that the cheese is moving. Like literally, the cheese is moving. What we thought Netflix to be a few years ago, Netflix may not be that. In a couple of years, they are remodeling themselves. It's the same thing as MTN in Africa. They are moving from just a tech company to a lifestyle, doing all sorts of things, enterprise banking, bringing solutions. You get not just tech, hearing it. Why? Because the world is moving and they have to keep up with it, right? And so it's very instructive. If you're a Netflix investor, look out for it. If you're someone that has considered Netflix, so Netflix has had a lot of issues. There has a lot of questions about their capacity to grow when companies like Amazon have one ecosystem that includes Prime, if you understand what I mean. So they have to invent the wheel. These are the things that they are trying to do. And let's see if it works to show in the numbers over time. Then you would see the stock price grow. Yep. Then the news out of Africa, right? There's so we all know there's something called the Africa Continental Free Trade Agreement, right? Um, so one of the so the a major part of that whole, there is something called the rules of origin. So the idea of Africa Free Trade Agreement is that if a good is produced in Africa, in Nigeria, for example, there shouldn't be any taxes or tariffs in deploying it in or selling it to Kenya, for example. Now, in the middle of that, you know that something could be maybe have 100% in production, but 50% was done in China. You bring it into Nigeria, do the 50%, label it as made in Nigeria, and ship to Kenya, right? So in that situation, what you could find is that a Chinese company can do that, and maybe at some point have only 90%, but the packaging on the outside is made in Nigeria, and they sell to Kenya and they benefit from the tariffs. So the rules of origin is key, is actually right in terms of know who is going to get this value or not. And they spent 4 years going back and forth. And you have to understand that this Africa Free Trade Agreement is going to take a while for it to actually solidify and be done, if at all it ever will be. But they've made one major progress. They've ticked one major box, defining or agreeing on rules of origin, where these are the criteria you must meet for you to qualify for Africa Free Trade Agreement, no tariffs, free trade zone, blah, 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 blah. Right? Now, yes, Egypt brokered the deal, but it's not more Egypt brokered the deal. But I mean, it's not just about Egypt brokering the deal. Everybody had to come together to agree. But the most important thing here is to understand, if you're an investor, if you're someone who has products that you want to sell in Africa, right? Or you have a product that you would import and bring to Nigeria, and then after you do something, you sell to Kenya, you have to go and read the fine print. Because don't just jump on it and say, oh, Africa Free Trade Agreement, therefore this thing qualifies. No. Go and read the fine print. At what point does it stop being really a Nigerian product? If you get what I mean. At what point? What layers of what layering do you have to do? What amount of layering do you have to do before it qualifies as a Nigerian product? You need to know that. So as an investor, if someone that they're importing and they're not necessarily producing here, think about it from that perspective. If you're looking at companies to invest in, think about it from that perspective, because the fine print is being defined. So you don't want to go and invest in something and then realize, nope, it doesn't qualify. Just giving you a heads up. But yeah, things are changing. And the fact is this: the moment we're able to effectively, or not even effectively, reasonably deploy this Africa Free Trade Agreement, and then you now begin to see that trade across countries. And then when you see all this airlines trying to set up stuff amongst themselves, payment systems integrating, guys, it's just a matter of time. Give it 5 to 10 years time. It's not going to be overnight. But if you are not plugged in, 10 years will come and then you'll be shocked. Where was I when all this was happening? I could have plugged in. That's the mindset. So open up and all. And then finally, Nigeria's money supply. Yes, Nigeria's money supply drops 1.5%. So now the reason why I highlighted this, it was very simple, right? One of the things that, when you see that the US Fed takes up interest rates in the US, right? And then you now see that, new house purchases slows down, consumer spending slows down, everything slows down. Why? It's because there's very little cash outside, right? And then it's more of credits that is driving the economy. So if it's credit driving the economy, when the Feds or the central banks make an adjustment, the transmission mechanism is effective. The moment there's so much cash in the system, the moment more people are trading on cash, leaving cash under their pillows, whatever central bank is saying, if I can do a trade without involving a financial institution, if I can lend to my brother, blah 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 blah, all your interest rates up and down, you're just stressing a little few. You're stressing a little few. So if you really want to understand how impactful, right, the central bank is in an economy, look at the cash in the system, look at the money supply. What is the trend around it? And so if the money supply is slowing down, it's a good thing to an extent, because it's a good thing as long as credits are flowing. But we know high interest rates in Nigeria is high, like there's no escaping it, right? But but it just tells you that the transmission mechanism with the central bank is going to be more effective. That's just it. And I dare say that the central bank has been doing a whole lot of good things. So, but that ability to take charge of the economy and actually be in charge of it, it has a lot to do with cash and money. So money that is moving around, and the composition of that money that is moving around. I just wanted to give you Econs 101. The final thing is that Tinubu approves 15% import duty on petrol and diesel. First thing to highlight, one, is that it's on petrol and diesel, not crude oil, right? So it's on the refined product. So they are taxing the refined product. Now, that's number one. Number two, the second thing to highlight is the simple fact, guys, that Nigeria has turned, like we've done a U-turn, a correct U-turn. And whilst it might not feel it in our pockets right now, but there is this thing called lead indicators. There are things that you'd say, like, so when the macros change, it takes a while for the individuals to feel it. But when fiscal changes, like the tax law that is coming, individuals will feel it immediately. But this is a macro change, right? A macroeconomic change, right? And why do I say we've done a U-turn? Nigeria, one of the problems we had before 2023 and all that was that we used to pay when people import fuel, we would pay them. It was a cost to the government when people imported, right? And then those people, it was a cost to the government. The people would get the subsidy from the government and sell in the market, right? But we have made that, we've turned the tide where when people import, the country is going to make money off it. And that in itself is a win. The challenge with that win is that you can only see it through the lens of your patriotism, not through the lens of your pockets, right? Why? Because this tariff that you're going to put on these goods, what it means is that if any company, Total, imports fuel and their fuel came in at 100 naira, the actual price that they would put on it to be 115, right? Because of that tariff. Like, it's not a direct math, but I'm trying to use a number that you can relate with, right? But long and short of the story, they said even on the like they're going to charge everything, not just the cost, the shipping, everything. They're going to cost the whole thread, right? But from a Nigerian government perspective, from a Nigerian economic perspective, it's actually a win. Now, who else is going to win? The second person that's going to win, of course, from a macro, it's a win. From a fiscal side, it's a win because as they import, cash is coming in. Now, the other people that are going to win will be the what's it called? The independent producers. Think Uncle Dangote. The only firstborn in Nigeria, the only son of the soil. People like Uncle Dangote, because there are other smaller independent producers or independent refineries, right, in the country. They benefit from this significantly. Why? Because for them, they are people are going to be forced to deal with them. If you get what I mean, they're going to be forced to deal with them. So what am I saying? Things are changing right before our eyes, and we need to be aware of it. We need to be very, very aware of it, right? And we need to know that yes, it's not going to pay our pockets at the start, because there's a chance that by the time this happens, we go up, because the if Dangote is trying to keep himself competitive compared to people that are importing, by the time this 15% is added, he has room to take up his prices a little, if you get what I mean. So that could happen. But guess what? The economy is becoming more stable, if you get what I mean. So on this note, I just want to say thank you for listening. If you found anything valuable, please share with a friend.